I'm staring at a letter from the IRS, and it's addressed to my friend, who just turned 30. And owes $23,000 in back taxes, plus penalties, because she didn't know how to handle her 1099 income as a freelancer. That's a debt that could have been avoided if she'd set up a system to save for taxes throughout the year, which is exactly what we're going to talk about today. You're probably watching this because you're trying to get your finances in order, maybe pay off some debt, or start building wealth. By the end of this video, you'll know how to avoid the same mistake my friend made, and you'll have a clear plan to start saving for taxes, even if you're freelancing or have an irregular income. My friend, who's a freelance writer, making around $60,000 a year, thought she was doing everything right. She was saving for retirement, had a budget, and was even investing in a Roth IRA. But when tax season came around, she was hit with that huge bill from the IRS. That's when she realized she'd been neglecting one crucial part of her financial plan, saving for taxes. She didn't know that as a freelancer, she was responsible for paying self-employment taxes, which can be up to 15.3% of her net earnings from self-employment. For example, if she made $60,000 in a year from freelancing, she might owe around $9,000 in self-employment taxes, which is a lot to pay all at once. But if she'd been setting aside money for taxes throughout the year, she could have avoided that huge bill from the IRS. So, how can you start saving for taxes, even if you're not sure how much you'll owe? The first step is to estimate your tax liability, which is just a fancy way of saying guess how much you'll owe in taxes. You can use a tax calculator or consult with a tax professional to get an idea of how much you might owe. Let's say you're a freelancer, and you estimate that you'll owe around 25% of your income in taxes. That's a pretty common estimate. If you make $4,000 per month from freelancing, you might set aside $1,000 per month for taxes, which is 25% of your income. You can put that money into a separate savings account, specifically for taxes, and then use it to pay your tax bill when it's due. Now, I know what you're thinking, but I don't have enough money to set aside for taxes. And I get it, it can be tough to prioritize saving for taxes when you have other financial goals, like paying off debt or building an emergency fund. However, think of saving for taxes like paying off a debt. You're essentially paying off your tax debt throughout the year, rather than all at once when you file your taxes. And if you're not saving for taxes, you might end up owing a lot of money to the IRS, which can be stressful and expensive. So, what can you do to start saving for taxes today? First, open a separate savings account specifically for taxes. This will help you keep your tax money separate from your everyday spending money. Then, set up an automatic transfer from your checking account to your tax savings account. This will make it easy to save for taxes every month. Finally, review your tax savings regularly to make sure you're on track to cover your tax liability, and adjust your savings plan as needed. If you're not sure how to get started, or if you have questions about saving for taxes, drop your biggest tax question in the comments below. I read every single comment, and I'll do my best to help. And if you found this video helpful, hit like. It tells me to keep making content like this. Now, I know some of you might be thinking, but what about other financial goals, like paying off debt or building an emergency fund? Those are important goals, too, and we'll cover them in future videos. But for now, let's focus on getting your tax savings plan in place, so you can avoid owing a lot of money to the IRS, and feel more confident about your finances. If you know someone who's struggling with taxes, or who's not sure how to save for taxes, send them this video. It might just help them avoid a huge tax bill. And if you want to learn more about managing your finances and achieving financial freedom, check out our next video, where we'll be talking about how to invest in a Roth IRA. Even if you're just starting out, it's a game changer for building wealth over time. Saving for taxes is an ongoing process, and it's essential to review and adjust your plan regularly. For instance, if you're a freelancer and you land a big client, your income might increase significantly, which means you'll need to adjust your tax savings accordingly. Let's say you're making $4,000 per month and you estimate that you'll owe 25% in taxes. but then you land a new client that increases your monthly income to $6,000. You'll need to recalculate your tax savings to ensure you're setting aside enough money. To illustrate this, let's consider an example. Suppose you're a freelance writer and you make $5,000 per month. You estimate that you'll owe 25% in taxes, which is $1,250 per month. However, you also have business expenses, such as equipment and software, that you can deduct from your taxable income. If you have $1,000 in business expenses per month, you can deduct that from your taxable income, which would reduce your tax liability. In this case, your taxable income would be $4,000 per month, and your tax savings would be $1,000 per month, which is 25% of your taxable income. Another important aspect to consider is the impact of tax savings on your overall financial plan. By setting aside money for taxes, you're essentially building a safety net that can help you avoid financial stress when tax season arrives. For example, if you're saving $1,000 per month for taxes, that's $12,000 per year that you can use to pay your tax bill. This can help you avoid going into debt or dipping into your emergency fund to pay your taxes. It's also essential to consider the potential penalties and interest that can accrue if you don't pay your taxes on time. For instance, if you owe $10,000 in taxes and you don't pay it by the deadline, you might face a penalty of 5% of the unpaid amount, which is $500. Additionally, you might be charged interest on the unpaid amount, which can add up quickly. By saving for taxes throughout the year, you can avoid these penalties and interest, and ensure that you're in compliance with the IRS. To take it a step further, you can also consider setting up a system to track your business expenses and income throughout the year. This can help you stay organized and ensure that you're taking advantage of all the deductions you're eligible for. For example, you can use a spreadsheet or accounting software to track your income and expenses, and then use that information to calculate your tax savings. By doing so, you can make sure that you're setting aside enough money for taxes and avoiding any potential penalties or interest. In addition, it's crucial to understand the different types of taxes you might be liable for, such as self-employment taxes, income taxes, and payroll taxes. Each type of tax has its own set of rules and regulations, and it's essential to understand how they apply to your specific situation. For instance, if you're a freelancer, you might be liable for self-employment taxes, which can be up to 15.3% of your net earnings from self-employment. By understanding the different types of taxes you're liable for, you can ensure that you're setting aside enough money to cover your tax liability. By having a solid understanding of your tax obligations and setting aside money for taxes throughout the year, you can avoid owing a lot of money to the IRS and feel more confident about your finances. It's also essential to review and adjust your plan regularly to ensure that you're on track to meet your financial goals. For example, you can review your tax savings quarterly to ensure that you're setting aside enough money, and make adjustments as needed. By doing so, you can ensure that you're in control of your finances and avoiding any potential tax-related stress. It's also worth noting that saving for taxes can have a ripple effect on your overall financial plan. By setting aside money for taxes, you're essentially freeing up more money in your budget to focus on other financial goals, such as paying off debt or building an emergency fund. For instance, if you're saving $1,000 per month for taxes, that's $1,000 per month that you're not having to worry about when tax season arrives. You can then use that money to focus on other financial goals, such as paying off high-interest debt or building a retirement fund. Furthermore, having a solid tax savings plan in place can also help you avoid financial stress and anxiety. When you know that you have enough money set aside to cover your tax liability, you can feel more confident and secure about your finances. This can also help you avoid making financial decisions based on fear or anxiety, such as dipping into your emergency fund or taking on debt to pay your taxes. By having a clear plan in place, you can make more informed financial decisions and achieve your long-term financial goals. In conclusion, saving for taxes is an essential part of any financial plan, and it's crucial to have a solid understanding of your tax obligations and set aside money for taxes throughout the year. By doing so, you can avoid owing a lot of money to the IRS, reduce financial stress and anxiety, and achieve your long-term financial goals.